Good morning and welcome to GrainTV for December 8th, 2011. In the overnight, we saw corn down 3, soybeans down 1 3/4, Chicago wheat down 5 1/4, and Kansas City wheat down 2 3/4. Cody, today is a Thursday, so that brings us to this week's export report. This week's export sales were better than expected across the board. We saw corn up 145,000 metric tons, better than expectations. Soybeans, 45,000 metric tons, better than expectations, and wheat, 50,000 metric tons, better than expectations. We beat, but not by a resounding amount. Take a look at where we stand in terms of meeting the USDA expectations. Corn well ahead, 91 million bushels ahead of where we need to be at this point in time, and soybeans well behind, 56 million bushels behind where we need to be. Though we did improve our position, we had 3 million bushels added and 5 million bushels for soybeans. We did improve our position, but it's just not going to be enough, I think, to sustain a serious rally. Take a look at corn prices versus the sales. After a precipitous drop in price down to $6 level, we saw 3 consecutive weeks of incredible sales. Then, we kind of fell off the boat there. Really didn't see any significant sales, but this week a little bit of a spark. But I mean, just look at the size of the bar. It's nowhere near what we saw when we were down at this price level just a couple months ago. Brock, what are your thoughts?
This week it is encouraging signs that we're seeing in the export sales. I don't think we're going to be able to sustain these levels, but it is nice to see these come back into the market. China is a noted buyer this week of about 551,000 metric tons. The industry was kind of looking for them to step in and buy at these lower levels. We have seen that happen in the soybean market. They also stepped in the corn market, as did Mexico and Japan. These lower levels are starting to spur a little bit of export sales, but I don't know if it's going to be a sustainable level. Let's take a quick commercial break.
Welcome back to GrainTV. We are now trading live in Chicago here. Corn trading down 3/4 cent at $5.92. Soybeans down 2 1/4, trading at $11.28, and wheat down 3 3/4, trading at $5.96. Take a look at the chart for corn. We opened up, we gapped down a little bit and traded down to about 586 level where we found support. That level has been a key support level for the last couple weeks here. Now we rallied sharply off of that, and now we actually traded up near 594. There's a good chance that we could be trending higher even throughout the rest of the day. I know that the traders are really looking at the USDA supply and demand report. Brock, can you give us your scouting report?
Yeah, basically tomorrow gives us the latest installment of the USDA supply and demand report. Looks like the industry is kind of expecting for ending stocks to be revised lower on corn by about 12 million bushels. Beans are revised higher by about 20 million, and wheat is looking to be revised slightly higher by about 2 million bushels. Keep in mind here, most of this is going to be on the demand side. The supply side is not really going to be touched until that January report, but these revisions are going to come from a couple different sources. I think on corn, we're going to be looking at more ethanol is going to be projected to be used. Corn is going to be used for ethanol, and I think feed use is going to be increased. Ethanol production has hit record high this last week at 954,000 barrels produced per day, and in the last 3 weeks, we've actually increased steadily over the last 3 weeks. But keep in mind, at the end of the year, December 31st, we do have the blender's credit expiration. So that is yet to be determined how that's going to affect the market. As far as feed use, livestock producers have been using wheat most recently to feed to their livestock. I think that's going to switch back to corn in the coming weeks, as we have had corn actually decrease in price compared to what wheat has done. Wheat now carries a premium over corn, so I think producers of livestock are going to move back into the corn market to feed their livestock. As far as beans are concerned, we have had lower exports, and we are well behind what the expectations are by the USDA for this year. And we also have a South American crop that looks to be huge in production right now down in South America. I'm looking at those numbers, and I think corn is a little bit bullish on tomorrow's report, and beans are a little bit bearish. What are your thoughts, Cody?
Well, just to recap here, it looks like corn ending stocks will be down, beans will be up, and that means that there's going to be a good chance that we see a little bit of maybe even a little bit of a rally off these low levels that we've been trading at for corn. Now, this is a report where they're focusing a lot on demand. I don't think production is necessarily going to be touched a whole lot. If you're talking about demand, beans is the story. We're 56 million bushels behind, like I outlined earlier, and I think that there's a good chance that we see export sales actually revised a little bit lower. So that's kind of what I'm looking at. Hey, just so you know, for folks out there that are interested in opening a trading account and trading for $7 commissions per side, if you open by December 31st an account with GrainHedge, you actually get 10 free trades to use in January 2012. So go ahead, give us a call, talk it over with us, see if a trading account is right for you and your operation, and maybe you can trade 10 free trades in January, in the new year.
Yeah, it'd be a great way to start off your new year. Make sure you follow us on Twitter, check us out on Facebook, get a hold of us at 877-GRAIN07, or as always, take a demo at grainhedge.com. We'll catch you tomorrow for the weekly wrap-up.